Hey Martin, can you hear me?
Yeah, I can hear you.
Awesome. Looking sharp, man.
Thanks, man. Had to be prepared.
Looking
It's
sharp.
really likewise, man. I like the shirt.
Thank you, thank you. I think it's gonna be a great one.
I like this picture too. Your other
Yeah.
log.
Nice, nice.
Hello,
Hey Stewart,
Stewart.
how you doing? Awesome. Yeah, we'll give it a few seconds and then we get started here soon.
Perfect.
Hey Taylor, how are you? Good to see you again. Hey Martin.
Fantastic.
Hey,
Fantastic. All right. We'll fire it up maybe in about 4 or 5 minutes here. Or less.
sounds good. So we'll stand by, Stewart.
Huh?
We'll stand by for a couple minutes.
No problem. How many people is he expecting?
Not sure. I think it was the cap was 60 attendees, so I think it's going to be a good group.
Okay, great.
We'll go ahead and get started. For those that are here and those that will be joining in, welcome. Today we have an honor of having Stewart Kirkham and Martin Kocher, real estate Dubai experts that are doing a lot of transactions in the UAE space and international space. So, welcome, Stewart. Welcome, Martin. Thank you very much for being here and your expertise and experience and being open to sharing and bringing on those that are interested in what you guys are currently doing.
Perfect. Thank you, Taylor.
Yeah, so
Thanks, Taylor. Pleasure to be here.
introduce yourself too. Yeah, we'll go ahead and start with Martin. If you could introduce yourself and talk to us about what you're doing in UAE and your current work and what you're doing over there.
Certainly. So again, it's a pleasure to be here. Thank you so much, Taylor. So hello, everybody. My name is Martin. I'm originally from St. Paul, the capital city of Minnesota, and I'm a partner at Gravity Power Management Consultancies, which is a boutique management consultancy firm based here in Dubai, where we help international investors, mainly in real estate, access different opportunities and also set up holding structures and businesses for investors. And in addition to being a partner at the consulting firm, I am a licensed broker with eXp Realty Dubai, which is a subsidiary of eXp Realty International, which is a US public company. And it's work with a lot of industry professionals in real estate here, and have done that for a little while and have a lot of experience. And happy to share a bit about my experience or any insights.
Sure. Thank you, Martin. Stuart, can you go ahead and introduce yourself and tell us about what you're doing currently in the Dubai
Sure.
market?
Sure. Thanks, Taylor. So my name is Stewart Kirkham. I grew up in Dallas, graduated from St. Mark's a long, long time ago, and moved to the UAE in 2008. Over the course of the last 17 years, I've had a number of different postings in the region, from Qatar to Saudi Arabia to Jordan. But the UAE has always been my home base for one reason or another, over the course of of that time. I have a management consultancy called Top Shelf Group, and we provide uh, bespoke strategic investment advice to investors and family offices. Martin and I work together on these projects. He's primarily the transactional focus, where I am focusing more on strategy and execution. So, really looking forward to giving you some insight into this market, and especially being able to compare and contrast what might be more familiar in terms of things in the US as opposed to here in the UAE, especially.
Definitely. Yeah, last time we spoke, you were talking about the growth in the UAE. Can you talk to me about the scope in which currently working and what kind of real estate you're currently working with?
So I'll quick answer that, and then I'll turn it over to Martin. But look, the scope and scale of growth, and I can speak from a very firsthand perspective. Since coming here in 2008, the population has nearly tripled. So that's rather significant. We're nearly at 4 million people, and we're one of the fastest growing metropolitan areas in the world over the course of the last 5 to 7 years, right? There's roughly 1,000 people moving here on a weekly basis, which is bananas. Now, not all those people are ones that are obviously coming in white collar jobs or doing real estate or investing in real estate or things of that nature. They could also be laborers and things of that. But it's a very dynamic place. It was it was the second highest performing real estate market last year after Seoul, South Korea, in terms of capital appreciation and investment opportunities, I suppose. And so it's imagine all the things that you see in the US that would take maybe 20 years to sort of manifest, 25 years to manifest. And here it happens in almost like 5 year sprints. So the growth here is really um, quite impressive. And we'll talk a little bit about what that means from a real estate point of view, because there are some very significant differences in the market here as opposed to in the US. I'll let Martin follow up on that.
Consistency is what.
Sure. So just
I went to the gym and I went to
bouncing
get
off of
chips.
what Stewart was
Recently, but
mentioning
it's doing the wrong
related
things
to
at the
the
gym.
growth of the Dubai real estate market. So I'm going to give a little bit of insight from what's been happening the past couple of years. Stewart gave us a longer scope view. So it's absolutely true. Things are growing very fast, much faster than things would go through in the US. For example, I'll be explaining a little bit since 2020. So since 2020, Dubai has added over 800,000 residents in only 5 years. It's experienced about 20% year-on-year growth. Even last year was a record of transactions with 761 billion dirhams, which is
82. I think what
200
could happen
billion
in an
US
experience
dollars,
like the content to
and
cash challenge is
over 188,000 transactions, individual transactions. So that growth is being fueled by a number of
has
things. The world
that way
becomes
of doing that.
volatile.
I want to
Dubai is
encourage
being
you
seen
to
as a
keep
more
the people.
attractive investment opportunity, where the government prioritizes stability, it prioritizes growth. There's a lot of demand from all around the world, people moving here. The government has a lot of long-term economic development agendas that underpin further growth, where companies are moving here and having Dubai as their Middle Eastern hub. And the government is prioritizing a diverse economy away from oil. It's important to mention Dubai's GDP is less than 1% oil. So they're promoting a very stable, diverse economy. And we're expecting a lot of growth in the next 5 years, which Stewart and I will explain a bit more about.
Definitely. Yeah. There's a lot of eyeballs in the UAE, in the Middle East. It seems as if the world's wealth is shifting towards that, the Middle East. And for the next 5, 10 years, that's the trend that we're looking at. Can you speak a little bit about the government support? How's the government supporting other the investors that are wanting to come into the UAE, Dubai market and invest?
It's pretty straightforward. They've made it a very easy place to do business. They've made it a place where they've improved the regulations, the legal structures, the protections for investors rather dramatically over the course of the last 17 years that I've been here. So what that means is it's an easier place to do investments and have a level of uh, security in the sense that there's protections there for you as an investor or as an owner, right? Or as a tenant. And because of that kind of openness, uh, they've in many ways tried to be the Switzerland of the region, you know, but in a new form. It's rather politically neutral, although obviously last week the president was here and there were a lot of big deals and things that were announced. Um, and so, it's really gained a lot of attention. There's structural elements in place that allow for foreigners to do business here and make it feel like it's actually in their own country. It still isn't perfect. It's not as advanced as some other places, say Singapore. if you want to look at other foreign destinations, but it's rapidly improving and rapidly growing. Martin can talk a little bit more about some of the specific regulations that would be of interest to American investors.
Absolutely. Thank you for that, getting the ball rolling on that, Stuart. So just bouncing off of what he said, and I think there's a common theme that can be put on the regulation in Dubai pertaining to real estate and everything else, is that the regulators here are learning every day and they're improving every day. They're seeing what's happening and they're looking to improve with everything. So they see what works, what doesn't. I'll give you an example. So during the 2008 boom, which Stewart obviously will have more experience about. However, there's a lot of foreign investors lost a lot of money here in Dubai. But as the market started to rebound, the Real Estate Regulatory Authority was established by the Dubai Land Department, having very strict regulations. And the most important one for any potential American real estate investor in Dubai is something called the escrow account, which was introduced in 2012, where an American investor pays the developer. It does not go to the developer. It goes to a government managed escrow account. And then once government approved milestones in construction are met, then a portion of that is then paid to the developer only for the project and only paid to continue construction. In addition to that, the transparency has risen in the Dubai real estate market. And that's evident by the JLL real estate market transparency index, where Dubai is not the top 5 yet. However, it has increased tremendously in the past 10 years. In addition to that, there are robust landlord rights. There are robust tenant rights. There is an independent dispute center for any rental disputes, which can be quite efficient. And it's quite friendly for foreign investors. And again, to sum it all off, in majority of areas in Dubai, it's 100% foreign owned. And foreign owners have the same rights as UAE national owners.
Just to put it in perspective, to follow up something, because transparency and improving transparency has been a big part of my career, especially when I was advising the government here, when I was a management consultant for EY. So right now, Dubai is ranked the number 28th most transparent real estate market in the world. And to put it in perspective, Portugal has been labeled as a popular place for Americans in particular lately to invest. Portugal is ranked 25th. So we're not talking about massive differences in the places that people can start to think, okay, would I like to buy a home there? Could I actually see myself living there? Those kinds of things. Will my money be protected? Can I get a mortgage? A lot of those things have really come into effect, and only a few years ago, Dubai was only like ranked 47th. So the government is doing these kinds of initiatives to improve the efficiency of the marketplace with the right kind of regulations that promote investment and especially foreign investment.
That's fantastic. And as far as I know, some of the benefits is also residential visa benefits for international students. Is that correct? Or does that pertain to certain countries?
I'm sorry, Taylor. Could you repeat the question again?
Residential visas, would that apply for foreign investors or only certain countries?
Stuart, would you like to start or should I lead this one off? Okay.
You can take it, Martin. Go.
Perfect. I'll get started on this one. So if you're talking about like an investor or residency visas, so the UAE offers several residency by investment opportunities. And this comes in many forms. So the first one is a standard investor visa, which is 5 years of validity. And the minimum investment requirement is 1 million dirhams, or that's around 272,000 US dollars. And either that's just invest at once in a ready-made property, but if it's in an off-plan property, which is the majority of the opportunity here, buying developments that are not finished yet, so buying it before or during construction, the building has to be at least 40% built to qualify. There's also the world-renowned UAE 10-year golden visa, which is minimum investment of 2 million dirhams or around 550,000 US dollars. And that's been attracting many high net worth individuals, and which basically means you're a resident of the entire UAE for 10 years. You want to work here, live here, no need for a sponsor, and it's renewable.
Yeah, from that perspective, I think that's one of the most incentivized options a lot of investors that are foreign could have to come over there and would have about 10 years visa. I think that's fantastic. Can you speak a little bit about some of the projections for residential properties and commercial properties? What are the projections look like for certain investors to invest over there?
Stewart, you want?
I said,
What's that, Stewart?
I can hear you. Yes, Taylor. Sorry.
Yeah, I was referring to the projections, the income, the revenue and projections that investors could expect whenever they come and invest in whether for residential or commercial real estate.
I don't think it really matters. I mean, the visa situation is one of those questions that kind of solve if you pick what's going to best for you. You don't have a visa to be an investor. It's one of the, and Martin can probably address this even better, but it's like the potential side effects of being an investor. There's plenty of people that own property here, but they don't have a residential visa. So it's not a prerequisite. It's something that here. There's all different avenues to getting a visa, not just buying property. You can start your own company like I have, and you can get a visa that way. As Americans, there is no issue. There's visa on arrival. So it's not that kind of a tricky question, if that makes sense.
My question wasn't in regards to visa. My question was in regards to the return in the investment. For say, for example, like you mentioned, it's about $275, $1,000, I would say. What are the returns that investors could expect for if it's going to be for residential property or if it's going to be for commercial real estate?
Look, the kinds of returns you can get here are commensurate with the kind of risk. So investing over here has a slightly higher degree of risk than if you were investing in your home country. Because the market has been performing really well over the course of the last few years, a lot of those yields have been higher than you would maybe find elsewhere in the US. As an American, there's also some favorable tax treatment, but it's somewhat case dependent because there's easily 50 different real estate developers, if not more, and not all of them are going to be able to generate the same kinds of returns. The majority of returns, whenever people are talking about this market, are going to be on residential returns. Commercial returns are a little bit harder to access. Commercial properties are harder to access. There just isn't the same amount of availability. And while you can trade in those as an investor, it's just a little bit harder to come by as a foreign investor. If anything, foreigners have opportunities to participate in hotel deals. So, for example, you buy a hotel room, right? It's almost like a timeshare kind of a concept. Uh, you have the opportunity to buy your own residential unit. Great. You can even buy offices. You can buy floors of buildings. Um, what is important to understand about this market is, in contrast to the US and many other places where you have a solid handful of dominant players. You have 4 or 5 different major apartment owners. You have 4 or 5 major office building owners. You have 4 or 5 major retail owners, 4 or 5 industrial owners. In the US, that concentration may command 70% of the market in any given metropolitan area. Here, it is the opposite. The larger ownership entities, we can call them institutions or we can just call them companies, it doesn't really matter. They might only command 30% of the market. That means that we have thousands of what I like to call micro landlords, people like you or me that decide to own a property in a building, and we're the landlord. And that is a little strange in this market because Uh, and I'll tell a funny story. There were a few years ago where some Americans came to visit, and this was when the market wasn't that great here. Buildings were finished, and we were eating dinner outside. We were looking at the building, and they said, I don't understand. The building's finished, but I don't see the lights on. And I said, you were not asking the right question. The developer sold those units. So who did they sell them to? The developer didn't sell, in a build to rent kind of a scheme. They sold them almost like condos. And so that's the way that this market works. It's a very big difference and it's a very particular nuance to this market. So when Martin's talking about things like off plan is selling individual units to individual investors in new buildings that are under construction. At the same time, the building could be finished and you're buying an existing unit in a building, just like you would a condominium, and you decide, I'm going to lease this out or I'm going to take it for myself. That's the way this market is composed. The returns can generally be higher, but again, it depends on who the developer is, where you're buying, what kind of location. Martin can talk a little bit more about some of those yield specific questions because I know he's been really working hard on researching some of those topics.
Sure. Yeah, I can get started on that. So again, as Stewart said, there obviously are higher rental yields here. That does come with a slightly higher risk premium. However, it's not like one paint, like one color across the whole map. It's different areas have different risk and different return profiles. So on average yields here are for residential are between 6 to 9%. We've seen as high as 11.9% in certain areas, and in certain sectors, it's on the low end around 4 to 5%. And keep in mind, this is Dubai specific. We can brief on the other Emirates at the end of the webinar, but let's focus on Dubai for now. So residential between 6 to 9%, depending on where you position. In commercial, around 5 to 7, 5 to 8%, roughly. Again, commercial, different risk return profile. And just wanted to mention a couple things and add on to a couple things that like what Stewart was saying is that there are many different land. It's very stratified here in the UAE. And a lot of the developers, because it was the incentive that they build to sell, from what I've seen, there's little build to lease developers here in Dubai. And when it comes to real estate investors coming here, and I can answer any questions on this later on, it comes down to the holding structure. So when you invest in property in the US, you set up an LLC as a holding entity, as an SPV for each project. Here, that strategy has not really hit the masses of real estate investors here. As Stewart said, everyone wants to be the landlord. It's very true. But I often see the mistake is putting a bunch of properties or a few properties under their personal name. You want a liability shield. The UAE does have holding company regimes that are very cost competitive or very efficient that to set up, and which does provide a lot of benefits to real estate investors. But it's just not a standard practice for many real estate investors, which presents an opportunity. And one more thing before we move on to the next question is the yields depend on the profile of the asset. For example, for affordable to mid-range, you can generally expect higher rental yields, usually between 6 to around 10%, depending on the area. And these are anywhere between 600,000 dirhams to about 1.2, 1.4 million dirhams, which is around 170,000 to like 330,000 US dollars. Your studio, 1 bedroom, 2 bedroom apartments in more affordable areas. These are great assets to hold long term and generate rental income, but generally experience a lower rate of appreciation. Although it's important to know that lower rate of appreciation is still higher than generally appreciation that happens in the US. Now, for the luxury segment, the yields for luxury is around 5% for a luxury asset. And with that, they generally have lower yields. However, the capital appreciation is much higher. For example, for any assets priced around 10 million dirhams plus, 15 million dirhams plus, your luxury ultra luxury bracket, you can expect, depending on where, appreciation from 25, 35. I've seen as high as 100% in very exceptional cases, and I'm sure Stewart can elaborate more on that. And the reason for that, and we can answer any questions on this later, is that there's an undersupply of the luxury bracket. But those are generally you buy, renovate, or buy and then resell. Whereas for the more affordable mid-market segment, you buy and hold that as an asset, as those generate higher yields.
I think those yields are fantastic, especially for an area like in the UAE. There's some places here in the US you can't get those types of yields, so it makes it much favorable. Can you speak about the legal structure and for people that are here in the US and maybe in Europe or elsewhere? How can it be structured legally for someone to invest abroad? I know you touched on it a little bit with LLC in comparison with LLC, but let's talk about the legal aspect of it.
That's all you, Martin.
Okay, no worries. Okay, so with that, there's two ways you can do it. Option one, I'll begin with option one, which is holding it under your own personal name. And then option two is holding it under a holding structure such as a special purpose vehicle, which I'll get to after the personal. So to begin with the personal structure, first off, for a foreigner to own property, it's called freehold. The UAE, or no, specifically Dubai, allowed for foreign nationals or non-GCC Gulf Cooperative Council resident passport holders to own real estate in Dubai, and these are designated freehold areas. So many of the common areas that you'll see are freehold areas, meaning us as American citizens can hold the property and have the same legal rights as UAE citizens. But this is not all of Dubai. So from a legal perspective, we can 100% own all the property and we have the same rights. In addition to that, the legal aspect, is there any questions you have regarding for personal holding structure?
Well, it's personal holding or a specific entity that someone wants to structure their investment on. Maybe they want to
Exactly.
protect themselves and they want to create a structure of business
Mhm.
for their investment abroad. I'm sure some people would want to do that. Some people would want to put their own name on it in their investment. It just varies. So I'm looking at both.
Okay. So with the personal, in designated freehold areas, which is majority of Dubai, foreign national can own 100% of the property. And then specifically with the holding structure, the investor can incorporate something called the special purpose vehicle in one of the free zones. There's two free zones that I recommend for Dubai real estate, which is DIFC, the Dubai International Financial Center, or DMCC, which is the Dubai Multi Commodity Center. So these free zones allow for ownership of Dubai real estate. And the setup is it's similar to the setup of a US LLC with a few more extra steps. Um, First off, you need obviously a passport. You need to pay the fees to incorporate it, establish it, and then these free zones require a yearly payment of a corporate service provider. So then you have a legal entity that takes care of all the bookkeeping and everything, and then you have a liability shield to then go invest in specific properties. And if you're doing a syndicate of, let's say, 4 to 5 investors pooling together funds, obviously the percentages, so on the MOA, right, the shares of the company depend on the agreed upon cap table.
Yeah, I think that's good. Hopefully, that's clear to some of the people that are here and those that be watching.
I just want to add one more quick
Sure.
thing regarding that. I forgot, I apologize. So very important thing to note is that companies or foreign nationals can incorporate or repatriate 100% of their profits. So there's no capital outflow restrictions, no fees that are paid other than potential transaction fees by the bank. From my experience, mostly do not apply.
Right. In regards to the fees that you were just mentioning, let's talk about closing costs for either commercial real estate that you purchased there in UAE or even residential. What are the prerequisite financing terms if someone wants to finance a commercial real estate over there? What are the options that they have available? Do they have to bring all the cash up front? Is there a closing percentage? In regards to the closing costs, what are financing options?
So there's a number of financing options for foreigners, and foreigners can actually get uh, mortgages here. In terms of the specific rates of closing costs and things, Martin can probably address it better than I can. But the the point is, regardless of whether you're investing here in Dubai or in Dallas or anywhere else for that matter, you want to try to get the big picture of what I like to say hidden tax. So closing fees and other fees, registration fees, these things here, it all starts to add up after a while. And the most important thing, if you're interested in investing over here, is having a trusted partner like Martin, in the sense of being able to help you navigate that, to put it in the proper perspective. There are fees. I mean, there isn't real estate tax per se, like there is in the US, but there are different fees that they get through utilities, or fees that are paid by a tenant, that covers municipality fees and things like that. So it's just it's slightly different. And we can articulate those from a different range and a different point of view, as needed. I don't recall the actual percentage roughly. Do you, Martin?
Percentage with like closing costs, you mean?
Yeah,
With residential or commercial?
residential.
Okay, so with residential, every residential transaction has a 4% fee, which is the title transfer fee. So when you purchase a property, you have to record in the Dubai Land Department. It's because you're transferring the deed, and that's 4% of the sale value. And then in addition to that, you have if you're doing a secondary transaction, so ready-made, there's a fee, a trustee fee, between 2,000 dirhams to 5,000 dirhams. And then there's a couple other fees, like to get the new title deed, which is about $150, 580 dirham. And then with the off plan, it's the same thing. So you have the 4% Dubai Land Department fee based off of the sell value, and then you have something called the Okud fee. So the Okud is a system where you basically record your deed before it's built, and then once the property is built, then they'll give you the title deed. So the Okud is basically saying, I have this property and it will be ready soon. This is basically my receipt that I will get my title deed when it is ready. And the closing costs are usually the same. So when it comes to investors, my recommendation is that they take what they do is they take like the total cost. Let's say they buy something for 1 million dirham, add an extra 5% as for contingency. So you have the 4% mandatory transfer fee, add a 1 to 2 percentages on top of that. Not necessarily that you'll have to pay that, but just as a contingency, which will cover your registration fees and other miscellaneous fees.
So in regards to maturity of the loan and amortization rate of the loan, are we looking at 15-year for a loan maturity, or is it 30-year? How does that look like?
So I can get this one started. So with loans, it comes down to two things. Obviously, if you're a citizen of the UAE, and if you're not, obviously all of us are not citizens of the UAE. So we are able to borrow between 50 to 70% LTV. And the loan period can be as little as 5 years up all the way up to 25 years, which is the standard rate. Interest rates are currently around 4.99%. Stewart, if I'm wrong about that, please correct me. So they're quite modest, and then the amortization is standard. Maybe if you want to add on to anything on that, Stewart, but the main thing is that here in Dubai, you are required to have a higher down payment, as using leverage isn't as common. And there's been some new there's been a bit more tightening of regulation by the central bank on making financing a bit more expensive.
It's still really competitive. The banking system here is not as mature as the banking system in the US, but it is trying to catch up with the speed at which the real estate market has really kind of like skyrocketed. So it just takes a little bit of navigation, but Martin's characterized it perfectly.
Yeah, Stuart, earlier you were mentioning about the risk, which as investors, we understand that there's risk in real estate. You mentioned Dubai has a higher risk than abroad in other areas. Can you talk about mitigating the risk, doing due diligence, what kind of due diligence we have to do to make sure that the
So
risks?
look, it's one of it becomes a question of familiarity, and it becomes a question of the integrity in particular of developers. So I'll address it in a couple of different angles. One is, are you willing to take development risk in any capacity? Meaning, if you are buying what they call off plan, which is something that's under construction, you are bearing some of that development risk as an investor, right? Now, there's different levels of developers. and their reputation and quality and location and other attributes of the asset usually mitigate those. There's also a handful of developers that are what we call semi-government, and they have major government investments. So going with them is usually not a bad idea, right? Because they're almost too big to fail. Existing property is less risky. If I wanted to buy an existing apartment in an area that I know has great tenancy and occupancy data points, then you're not taking on that development risk. Now, your returns might not be as high, but that's just depending on your own specific investor appetite. Now, the reason why I say that investing here is riskier, and a lot of it just has to do with the things I just mentioned in the transparency index. Now, we're 27th in the world. That's great. It does mean that at a slightly higher level of risk, you can get really outsized returns, as opposed to buying a property in Dallas or a suburb of Dallas, for that matter, where it will create a lower potential level of appreciation and less risk. So your yields are naturally going to be a little bit lower, right? So this isn't like risky in the sense of like, oh no, I'm gambling. This isn't going to the casino. But compared to other major blue chip cities, and this is something that we have to explain all the time. Like if you were to invest in London, your investment would be considered safer than investing in Dubai. If you were to invest in New York, your investment would be considered safer than investing here. This is a very dynamic market. There's a lot of liquidity. There's a lot of money coming in and money coming out. And so it has become a place that people have enjoyed investing. They've been really rewarded for investing. And with the right kind of guidance, are able to categorize and classify those various risk elements so that way, as an investor, you're going in eyes wide open as opposed to potential surprises. I'll let Martin wrap that up.
Sure. So I think Stewart mentioned and laid a couple things clear when it comes to I guess evaluating like developers. Obviously, having developers that have very big names and have backing by emirate governments is considered more stable. I'll mention a couple names in Dubai's case. I like to call it the top six, and these developers are Emaar. Developed the Burj Khalifa, Emaar Aldar, which is Abu Dhabi based, Emaar Aldar, Bengati, Shoba, Omniat, and Ellington. These are developers that have done a very good job delivering high quality units and have a track record of not just building on time but before time. And that's another key thing is construction timeline, is that are these developers delivering on time? And a key thing to look for with developers is that the top developers that have very good quality and deliver before their expected handover date manage everything in-house when it comes to construction, to quality control, to procurement. They manage it all in-house. Usually they demand a higher premium, but you're going to get a product that not only lasts, but has, again, a liquid a pool of buyers to buy from. So that's a key thing, is the developer reputation, of course. And then I'll go one layer above that, and not just developer reputation, but also obviously the location of Dubai. As we know, the golden rule of real estate is location, location, location. And applying that into Dubai's case is also seeing what's going to happen in the future. Dubai has always and is very much a future-oriented city, backed by a track record of progress on delivering, right, and learning from mistakes. So in 2040, the Dubai government has a plan called Dubai 2040 master plan, which is the urban master plan of all of the emirate. And there's going to be 5 urban hubs in all of Dubai. I won't get into too much detail. That would require another webinar. But each of these hubs serves a specific purpose. Dubai's economy is extremely diverse, and these hubs are specialized hubs in something. And these hubs are not only going to concentrate value, it's going to concentrate jobs, concentrate amenities. So overlaying this map of pre-qualified developments and developers with the urban master plan on where is development going to be focused is going to add an extra layer to your due diligence, because as an investor, you want to make sure of a couple things. You want your asset to appreciate. You want, if you plan to resell, you want to have a liquid pool of buyers. And if you're looking to rent out, you want a quality tenant. You want a tenant that is able to be in an area where they have a job that will be able to pay for the unit at the rent amount that you charge them, and have a tenant that so you don't have to go into the dispute center. And also in Dubai, the rent usually goes by like 3 to 4 checks a year. So you want to be able to make sure that your tenant can actually pay that. So high level, that's pretty much like the beginning due diligence of any development.
The way you explain it, we see that there's so much growth, and there's going to continue to be growth. Like you mentioned, one of the things is location is extremely important. With that comes competition, and then that competition is going to be making more risky and whatnot. Can you talk before I give it off to anybody that's in the room that has questions? Can you speak about some success stories of investors that were brought in, have come there and have invested? What are some outcomes you've seen? What are some success stories?
I mean, I can talk about some success stories. I can talk about some stories that are less successful, because you have to look at it over a really long period. I'll focus on like the last 5 years though, right? In 5 years, the values of the properties here have really, I mean, 70% appreciation is just crazy. Uh, I had a friend who was living here, and they bought a unit in a very great area in the middle of COVID. And they bought it for, I think it was something around the neighborhood of around 5 million dirhams, which is not quite 2 point, it's, what is it? It's not actually, no, 1.8, 1.7, I think, million dollars. Anyhow, uh, they decided to move back to England uh, over just last year. This was a house that they were living in. It wasn't one that they were renting, so they were paying themselves. That same house with very little renovations ended up selling for 13 million. And you hear these stories all the time of people that either bought as an investment, bought it for themselves, or, you know, there's a pattern to it though. And the pattern is echoing what Martin had mentioned before, is that these are in reputable locations, reputable builders and developers, uh, known to be magnets of these urban cores, these urban hubs. That means that your risk in terms of being able to find a tenant or finding the right property manager to help you with that is low. And so, you know, there's a number of different ways that you can participate in a market. One is actually buying a property. Two is investing in one of the REITs. We have REITs here, but they're not that big. There's a third one that I'm not an advocate of, and that's using tokenization of real world assets. To me, that's much riskier and less liquid than advertised, and I think it's still somewhat immature. Um, I would give that a few more years if I wanted to participate. Uh, a lot of people have viewed this place as almost like real estate is almost like a sport. It starts off as someone that comes here on a vacation, they're like, wow, this place is growing like crazy and people are coming and they're spending money. I want to get a piece of that action. And then they do a little bit of homework. And then they meet people like Martin who could say, look here, don't look there, do this, do that, that kind of a thing. And so, I mean, the number of success stories are great. Where I say that there's fewer success stories is if you're taking unnecessary risk, which would be going with developers that don't have a great track record, which is going with developers that are promising certain things. They are able to advertise and promote real estate here in ways that is actually against the law in the US. So don't get suckered into hype, you know, always look at the assets and the underlying value of the assets and that underlying value of that location. And if you're able to connect certain dots with the right developer, the right location, the right kind of product, then you have a great opportunity to have a really good investment. And actually, a lot of people have fun with it. You know, they love being able to come here and see the apartment that they own, or they'll buy one for themselves, and do Airbnb out of it and come here for a few weeks out of the year. I mean, there's so many different things that you can do. It doesn't mean that the market doesn't have risk. It would be a fool for anybody to say that there isn't risk, but there is a lot of upside. There's a lot of action. It's an exciting place. There is a new center of gravity globally in the sense of whereas, previously people may have thought it was, Asia along the lines of Singapore or Japan or even China to a certain extent, that's shifting a little bit into this part of the world. And, I've seen this story since coming here in 2008, and it's really becoming a dominant global center of business and leisure. And, that's not even talking about the things that our neighbors in Saudi Arabia, Bahrain, Qatar, Oman are doing as well that are elevating quality of life, living standards, and social investments. So it's got a lot of good things going for it. But success stories, we could talk all day about success stories, Taylor, right? There's too many. It's unrealistic to think you can come here and double your money. That doesn't make sense. But it is realistic to think that if you tick those boxes the way that I was articulating, that you can not just get appreciation, but you can get good rental returns. And that's a fair statement. Wouldn't you agree, Martin?
I would absolutely agree, and I just want to build off what you said just really quickly, being mindful of time. So something very fundamental, because again, I've seen success stories and I've seen not so successful stories here. First thing with any developer with off plan, as it carries more risk, is escrow account. There must be an escrow account. You never never give money to a developer that does not have an escrow account. And for anybody that's interested, I can show how to check that. The DLD has a website on to verify that. And I just want to now I want to share an actual transaction that I helped facilitate. This is actually over New Year's. It was by a gentleman too from Germany. He came and he saw the real estate and he was like, okay, I'm allocating. And he saw this one developer that is very flashy, has a lot of PR marketing, but hasn't really handed over much, like anything. And so we looked into it. I was like, okay, like surroundings doesn't look good. So I pointed him the direction of another developer with a villa development. So he's actually bought that. And then since then, the appreciation has been very high as there's a higher demand for family-friendly villa communities. So over the past almost 6 months, he's achieved a good amount of ROI. So I feel quite good about that to help steer him in the right direction. The second thing is actually a story I heard today. I had a meeting with my EXP team. We were doing some meeting and some training for some new brokers. And one of our head leaders, his brother made 1 million dirhams just by reselling. So a common practice is you buy off plan, put 50% down. About a year later, you have a buyer that buys it, and you make the returns on only putting in 50%. So he sold it for like 2.1 million dirham and received about 1 million dirhams in profit. And that's basically selling it before handover. You have to wait a certain time, but if you sell before handover, you can actually get a return and get the ROI on only the amount you paid in. Again, it doesn't work, broad brush, but in certain situations you can do it. So that's another success story. I've also heard a not so successful story. The same guy, when he invested in 2007, 2008, back when the market went from here down to here, he lost $2.1 million in one day. Slept, woke up, 2.1 million just gone. But obviously that kind of stuff does not happen anymore because there's so many protections in place in Dubai to protect your money. And those kinds of swings don't happen because the demand is quite strong. This is a demand fueled expansion, right? And now to touch on the final point, which Stewart mentioned, is Dubai is becoming a focal point in the world. Dubai is becoming one of the top 5, top 3 global cities in the world, and that's only going to continue. It's proven to be resilient among many turbulent times in the world and deliver value and improvise. And also, one statistic I want to kind of finish on is that despite Dubai rising so fast and being very prestigious, Dubai, if by price per square foot, is far below London, New York, Hong Kong. For example, it's about like luxury units are around $800 to $1,000 per square foot, compared to over $2,000 in London and New York. That leaves a lot of room for growth and appreciation. Dubai has proven itself to be a very stable, respected global hub and will continue to be so.
Fantastic. Thank you very much. I know it's getting late over there in Dubai, but really want to appreciate you. Thank you, Martin and Stephen and Stewart, for your time, for your experience and sharing your advice. I just want to give it a few minutes. Does anybody in the room have any question, any remark that they want to give to Martin and Stewart?
I have a question for the group. Has anybody visited here on the call?
Has anybody visited in Dubai in the call yet? I haven't. I'm planning on it.
I have.
Cool. What did you think?
First of all, Dubai have a good selling strategy. It really, from the airport, they start already selling you without you knowing that you're being sold something. So they just start with you with, hey, you know what? We can go and have a really free lunch where you can have an opportunity. So uh, everywhere you go, every kind of store or shop, they offer you a free thing or something before, like, hey, yes, brother, you take this for free, take it home. And then when you get that, then they give you, okay, you can get this for free, but listen, there's this one, you can give this 3-pack. You just pay with maybe 200 dirham. But also it's a really good place where you can invest. I had to meet some people where you can invest as being a Hilton hotel shareholder, trying to be with some investment, and you can be part of them, having like a part of a room in the hotel where you can start also like sharing or renting them by yourself, having a like 5 years or 10 years agreement with them. So yeah, that's what I really learned about Dubai, about from being a really place to visit, but it's also a good opportunity to make money and they have a good business too.
there's a hustle here, and there's one thing that we forgot to talk about is how incredibly safe this place is. This place is
Yes,
so
true.
safe. It
Yes.
is, you don't lock your doors, and I mean that because I'm very guilty of not doing that, although I'm getting better. I mean, crime is unbelievably low. I mean, it's 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 incredibly safe. And what's remarkable is you have a big range of socio demographics and cultures and ethnicities, but it's really a very equal level melting pot for people from all over the world, which has made it rather incredible. It's one of the most multicultural places that I can think of. At my kids' school, when they were going to school at the American school here, there was something like 80 nationalities in the American school. And that's just crazy, you know. That's the way of the future, right? You know, we're becoming a much smaller place. We're learning new things about people and things from all over the world. And when you get a chance to see how that's coming together in a place that's safe, you know, and I'm really glad you mentioned that, uh, Jonathan. I think Taylor accidentally hit a button.
Yeah,
Uh,
yeah.
but thanks, because we forgot to talk about safety, which is like one of the biggest selling points. So there's a hustle. People are definitely trying to sell. Um, it's probably helpful the next time you come visit that you talk to Martin or me, and we'll get you pointed in a better direction potentially, not feeling like you're needing to take things for free.
I just want to add that that's so true. It's very safe here, but people will do anything to sell you something where you have to be careful. Like people have been scammed before. I've been guilty of that a couple times. So like physically you don't have to worry. You know, you can if there's an empty spot on the cafe, you can just put your wallet. Nobody's gonna take it. But you know, but you're very safe. It's just, you know, sometimes people, as you experienced, Jonathan, people will push you to buy things, and you know, they're not going to do anything. It's just kind of a cultural thing here too. Many people sell very aggressively.
For sure. Yeah. I've shared the QR code for those that are looking to stay connected with Martin and Stewart. Uh, for those that are working, wanting to continue to invest and things like that. Any closing remarks, Martin, Stewart, before we close it out?
Look, you know, this is a great real estate. I call it a global R&D hub, you know. Uh, I've been doing real estate for a really long time, and it's a very dynamic market. It's a very exciting market. It can be a very fun market. Uh, if it's a place that you're looking to invest, then look no further than Martin. I'm always there to help support and provide certain strategic advice, but we'd love to work with you guys. And thank you for Taylor for setting this up. I appreciate it.
Likewise, happy to answer any more questions about investing in Dubai or the UAE. There's definitely lots of opportunities here. It just requires somebody knowledgeable, a good guide on the ground, and being around a good network. And I'm grateful to be part of a network with Stewart and many of my other colleagues that I work with in the legal and finance and government, and any requests, we'd be happy to help out with. And anyways, I encourage any American to look into other markets and capitalize on the growth where I think you can do both and benefit from that.
Certainly. Last point I wanted to bring up because I know Joseph is here. He's in the the Republic of Congo. I know last time we spoke, you mentioned about mineral opportunities. Can you throw just a little bit of that in here before we close it out?
Yes, absolutely. So I'll be quick. So with Gravity Power, we do a lot of work with investing in infrastructure projects, and we work with a lot of African governments. One of them that I've been grateful to engage it with is the Democratic Republic of Congo. Lots of opportunity in the country. They're moving in the right direction. And I had the pleasure of speaking with the minister, one of the minister of mines, a couple of weeks ago at a diamond conference here, and we're looking at engaging our investors in the DRC. So in the next few weeks or months, I'll get them on a call, and they can present some of the different opportunities. There's also real estate opportunities in the DRC. I met last year. I did meet with the developer there. They have some off plan in Kinshasa and Lubumbashi. So I think this shouldn't just be a UAE. This can be a UAE plus X like group where Stewart has meant lots of experience with Saudi. There's opportunities in Oman, in DRC. So we can look at opportunities around the world. But yeah, happy to facilitate that call. And it'll be done in French to accommodate any French speakers. And I think it'll be a good discussion on the opportunities.
Definitely. For those of you that are interested and wanting to take part of this, not just the meeting, but this investment opportunity in DRC in Dubai, definitely reach out to myself, Martin, or Stewart, and we'll be happy to have you. All right. Thank you very much, Stewart. Thank you, Martin, for your time. I know it's late over there, but I really appreciate everything that you've been able to share with us
Thank
today.
you.
Thank you.
Always a pleasure.
Enjoy the holiday weekend if you're in the US.
Sure. You guys have a good one.
Take care, guys.
Take care. Thank you. Bye.
Bye.